Great. Recording in process. Okay, great. So, because we've already done this before, this will just be a nice little light conversation. We'll keep this cute. We'll keep it
Right?
simple. We'll keep it easy.
Still have
But
my notes, so it's all good.
which is great, which is great. So, Crystal, can you share with the people uh who you are, your background, and how you got into this entertainment space?
Yeah, sure. So my name is Crystal.Davistaylor. I have been a financial advisor or in some capacity in the finance, planning, insurance, brokerage industry since January of 2000, actually. Um, and I started my own business in 2012 after my daughter was born so that I had more freedom to be a mom and choose when I worked. And thinking that self-employment would allow me the freedom to do what I wanted, which it does, but then I just have to work all the time when I'm not doing things that I want. So, there's always the sacrifices to that, but I love it. So I do financial planning, tax preparation, insurance, all of those types of things are what we do here. I have a 14-year-old daughter who drug me kicking and screaming into this entertainment space. Not that I didn't. I mean, I was a dancer. I danced professionally when I was young. I was always into theater and, I did those kinds of things. But I left that at the door many, many, many years ago. And my daughter picked it right up and kicked that door right back open for me. So 2 years ago, we started with the arts. And she fell in love with all things entertainment. She is already a professional circus artist. She has a couple of contracts currently. And so through the last couple of years, I've gotten very educated and involved and interested in also helping young artists and I'm seeing a real need for assistance for people who are starting this journey, not realizing that they're going to be self-employed. Like it or not, again, you're being drugged, kicked and screaming into the world of being self-employed. And it's a lot. And I get that. And especially for young people or for people who have kids, it's a very complicated thing or can be a very complicated thing. And so, I saw a need for that. And then when I saw you also saw a need for that, I wanted to help. So here we are.
Well, thank you. And I definitely appreciate this because I can only speak about it from a performer standpoint, but for you, like, this is your business, this is your bread and butter. Like, you're an expert who I think can provide a lot more context and value than I ever could. So my question is to you, because I think when we were speaking about this, both helpful for parents and for young adults or just, those stepping into business, what have you seen in your time in the financial space? Like, what is a big either one common misconception or two, a common mistake that you see people make that they're not aware of when it comes to their financial literacy?
There are two big things that I see that that are concerns or things that like those first two things that you should really be doing when you start this journey. The first thing is record keeping. Keep everything. Because even if you have no idea what you're doing or what you're supposed to keep, if you keep everything, including even simple notes like what this thing was for, what this receipt is from, how in your head, how you think this is a business expense, then it's a lot easier to go back and figure out what actually is once you either get a little bit more educated or you find a professional, which is the second thing that you should be doing. Is finding a professional. Find someone who can help you do the things you need to do, who understands whether it's a tax professional, if you're wanting to start an LLC and do business plans and do all of those types of things. Someone who understands that, whether it's an attorney or just like a business consultant, a new business consultant, someone along those lines. But find a person and find the right person. Don't find someone who you're not comfortable with. Don't find someone who's not going to answer your questions. Don't find someone who makes you feel stupid, because then you're not going to ask the right questions. So you want to build a relationship with somebody that you're comfortable with and someone that you're going to be able to communicate with and have a good relationship going forward to help you learn those learn what you need to do, because then the next step is obviously your own education, understanding what you need to do, understanding, really what you need to be keeping, really, if you need a business structure of any kind, or for, for kids in the industry, when we start talking about escrows and, Roth IRAs and ways that we can give them the best possible future. It gets, obviously we get in the weeds with that, but you want somebody that's going to help you understand all of those things so that you're doing the best that you can for your future. So.
And I love what you basically just gave a nice general overview of like building one's foundation. So if it's not mom and dad, and what would you say, let's just start from that perspective, parent to child, what's a good, easy way for a parent to start to have these small conversations to make their kids start understanding the value of money?
Give them money. I mean, that's realistically, like, you need to be giving your kids an allowance. You need to be giving them the opportunity to spend money, whether responsibly or irresponsibly, in order to learn those lessons. You can't just always say, yes, you can have that, or no, you can't have that, and that's the end of the conversation. You have to allow them to understand what budgeting means. You have to allow them to prioritize. As an example, with my daughter, she will spend my money all day long. We will go shopping, and she will buy all the linen and all the cosmetic products that I know she is never going to use. But the second I say, all right, but you have to use your money.
Yeah.
Oh yeah, I don't really need that. I don't need it. So you have to allow them.
Yeah.
To make those decisions and to prioritize what's important.
And when it comes to prioritizing what's important in those decisions, can you also maybe tap on, as we dive more into the artist financial foundation, the mindset with money? Because do you find that some people, because we all have different relationships with money, some of us maybe had access to it, didn't have access to it, had to work for it, or maybe saw it in a scarcity. What's the mindset when you talk to your clients, and just what you've seen through your time in this business about people's psychological understanding with money?
Yeah, it's very difficult when you start in this business, because you're gonna be broke. You're gonna be broke. It may be at the start, maybe you're someone who worked in a career and you weren't broke at the start because you were kind of double dipping it, maybe, making a career change, or you're still working, waiting tables, or whatever the case might be. But then there's going to come a point where you don't have time to do both, or where you have to finish a job for 3 months before you get a check.
Yeah.
And so you have to learn to budget, and you have to learn to understand what you can live on. What are your real necessities? And at what point, do we take the next step up to feel like, okay, I've been living with mom and dad, or I've got 4 roommates in a 2-bedroom apartment. Those, most of us have been through that at some point, college or starting in the industry or whatever. At what point do you feel like, okay, I think I can move forward. I can go get my own place, or, I can move into move to the city, move to LA, move to New York. And that point is when you have 3 months worth of living expenses.
Yeah.
When you have 3 months worth of living expenses, that you can go 3 months without work or without a paycheck, and know that you're going to be okay. That's what I tell my clients. Me personally, that's not enough for me.
Yeah.
I want 6 months, because I'm a baby and I work in finance and I know how quickly things change. But you have to have the ability to do that, and you have to have the ability to understand, is this a need or a want? Learning to budget, learning to live on the slim side, learning to cook your own meals rather than eating out. And, and it's difficult, especially when you're young, because you want to go out and you want to have fun, you want to do things with your friends, but there's a line, there's a limit, once a week, twice a week, whatever that might be, just until you get to that point. Because if you don't have any money, you have to go home, or you have to quit, or you have to go back to that job you hate, you're losing that battle. So that sacrifice is part of what it takes.
So in accordance with budgeting, can we talk about this before we move on to taxes? Everybody's favorite topic.
I love taxes.
I-
I love paying them, but I like the paperwork.
so you had hit on that fluctuating income and making sure to have either 3 or in some cases 6 months. Can we talk about 2 perspectives? One, if you're a parent starting with your child coming up in this business, what's a good way to start getting them to think about money when they're no longer depending on mom and dad? And then 2, if we're just some young adult or maybe someone that we've pivoted careers. So can we just start with the parent to child dynamic while they're in this career? So let's say that they get a job, and out of this job, they get paid $1,000, 10 grand. What is a good practical way for them to start to build that financial foundation?
You want to put as much back for them as you possibly can. I understand some families don't have the option of saving all of it. Some families do, some families don't. I get that. I understand it is very difficult to start a kid in this business. You don't start making money out of the gate. You're spending money that this career is an investment. It starts with an investment. It starts with classes. It starts with workshops. It starts with travel. It starts with photo shoots, and those things are coming out of your pocket. So, every family is going to be different. Sometimes you're going to be able to put all of it away. You work with a financial advisor. I love putting money in Roth IRAs for kids because the time value of money on those is just insane. That money, that $5,000, $10,000 you start with is just an insane amount of money in 50 years by the time they retire. So I love Roth IRAs for savings, but you also need to be cognizant of the fact that those kids, if they're serious, I have a serious kid because of this journey. I know lots of kids that are serious. Like my child is serious. She is working toward going into the business. So we are saving for her to be able to survive, to do that once she is an adult and can go to New York or LA or Montreal or wherever she ends up wanting to try to pursue her career. But I understand some parents are going to have to pay themselves. And I get that. Like you're going to have to take some of those expenses out of that. But as that money comes up, the amount that you should be able to keep back should also be going up. There's limits to what you can put in Roth IRAs, obviously. But you want to be saving as much as you can for them. So that gives them that windfall that we're talking about the second they're ready to get out and go. It gives them the opportunity because unfortunately that gives them a leg up. It really does. Being able to be there the second they can be there, being able to start in the business before they're 18. It really does, because there's such an influx of people in that 18 to 22 range. So the sooner that you can save and get them on that road and get them the classes they need, get them to an acting school, get them to whatever it is, that helps them meet those goals. Having those funds available now will allow them to have a leg up down the road and be able to do that much sooner.
Now, what if I am someone who I don't have mom and dad, I've been on this kick for like 5-10 years on my own, and I'm either pivoting altogether on my own, or like I'm out here just on my own doing it. Like, what would your recommendation be to me? Hey, it's my first professional job. I've gotten a cute check out of this. And I think you said something in regards to like, make sure that you pay yourself first, taking care of those necessities. Like, how would you advise me in terms of those foundations?
So you want to, whenever you get those checks, you want to make sure that you take, you have enough to pay your bills, obviously. The second you have enough to pay your bills out. So let's make the numbers easy. Say your monthly living expenses are $3,000 a month, and that is, that includes your insurances and your grocery bill and everything. That is reasonable. Give yourself a little bit of fun money. It's fine. I'm not Dave Ramsey. You can go to a movie and have dinner. If you're miserable, you're not going to want to do it. So it's okay, but budget it.
Yeah,
it's a couple $100 a month, or it's 10% of that check, or whatever the case might be. Everything else goes into savings. You have to do that first. Savings, retirement, life insurance, health insurance, all of those things have to be taken care of before there's any extra. So once you have that savings and you feel like that cushion is in place, then maybe you can do a little bit more fun money, or you can, travel a little bit more, or maybe move into that bigger place. But that needs to be happening on a consistent basis. Yeah. Otherwise, we're putting it in, we're draining it, we're having to go get a second job. We're putting it in, we're draining it, and it just perpetuates that cycle. So it really is about sacrifice at first and getting, really getting to a place where you can be comfortable in having the really weird pay scales and not knowing when your next job is going to come or when your next check is going to come. It's the same in my industry. I have big months and I have small months, and there are months that I don't get a paycheck. My staff gets paid, but we don't get a paycheck. So I have to make sure that I have money saved for, from the bigger months, that I have money saved back for those months so I could pay my own bills.
Wow.
So.
And I think this is something interesting that I think a lot of people could learn from. Can we talk about this just for a quick second? Treating yourself like a business. And can you explain this again? I know you just slightly tacked on it. Like, there are sometimes when you don't pay yourself first as a business owner. Can we talk about how this translates into us? And I know you lightly talked about it, and so I just want to review this again. As you said, if you have representation, you got to pay them.
Yep.
Those voice lessons, those dance classes. If you are someone that happens to be in the union, you're paying your union dues. If you've not paid your in full yet your initiation fee, be it SAG-AFTRA or Actors Equity, there's a portion of your check that goes to them every check.
Yep.
Or if you are someone that's on the union's insurance, which is its own entity, it's an investment, and I hear you. But when people hear that, people just automatically get some resistance to that. Can you maybe talk about how, again, it's that maybe understanding the mindset of what it means to be fiscally responsible in an industry that is so unpredictable?
Yeah, it really is self-employment. You really are a small business. And just like I have to pay my rent, I have to pay, my staff, I have to pay, for insurance and for retirement plans for those staff members and for myself. It's all part of running the business. It's the business expense. It is the investment into that business. And I understand where that resistance comes from, but you can turn that around pretty quickly when you think, oh, well, if I don't pay these things, I don't get this life I want. This is the price you have to pay for the life that you want. It just is. Without an agent, you're not going to get the work that you may get some work doing it on your own, sure, but it's not going to be as consistent, and it's not going to be, maybe as well paying, and you're going to work a lot harder for it. So, it's the price that you have to pay to be in business. Just like, I have to pay for insurance, and I have to pay commissions, and I have to pay all of those things as well. And it's just, you're a business. You become a business. You are the product. Yeah. But you have to pay to produce that product. Just like, a clothier has to pay for materials. They have to pay someone to sew it. That's your product. And there are prices that come with producing that. And those are all of the things that go into that.
And part of that comes to when we come to that adulting conversation, that T-letter word, taxes.
Yes.
What are some common mistakes that you see performers make year after year, or just ones that they don't know?
The biggest thing is, again, going back to record keeping. Keep everything, because even if you don't know what you're doing, if you also find that good professional like we had talked about, they will know what they're doing, and they'll know what you can deduct, what you can't deduct. It's going to save you a ton of money to keep your expenses, because you won't pay taxes on anything that's a legitimate expense. So, if you get a check, maybe a $10,000 check from a job, from a gig, but you spent, $3,000 on travel to and from the location because it wasn't covered. It was a local job. And maybe between, hotels and travel and rentals and car rentals and those kinds of things, you had to spend money getting to and from there. And then, you had meals while you were there. And maybe you also had to have, maybe you had to take some dance lessons because you're not a natural dancer, and you had to take some dance lessons to be able to effectively do the role. That's all deductible. So most people aren't keeping those types of things or keeping track of those types of things. So you're paying taxes on $10,000 when you realistically could be paying taxes on $5,000. So it's significant. It's very significant.
Two things, because I know you had mentioned this earlier at the top. Can we talk about it from a union and a non-union perspective? I know when you're in the union, sometimes SAG-AFTRA and Actors Equity will provide you, hey, here are the people that we recommend that do entertainment, that handle taxes and insurance. If you're not in the union yet, what would you recommend to them in terms of finding someone? Like, how would they go about doing their research to find someone like you who does cater to that?
I honestly don't know. I don't know, other than the people that you can get through SAG. And I'm guessing there's probably a website that is publicly available that may have some of those resources available. I don't know anybody else that does it besides me that has this specialized type of knowledge. But if you find a good tax preparer, CPA, business planner, there's a lot of crossover. So you don't necessarily have to find someone who specializes in the industry. Obviously you want to try, but if you can't, or you can't find someone close, or you can't find someone who will take you because you're broke and maybe you can't afford whatever they're going to charge, we get that, I get that. Then find someone who's good, find someone who is smart, find someone who is willing to do the research with you or for you on your behalf. I try to avoid, or I would recommend trying to avoid bigger firms, larger like CPA firms, because they just, I don't feel like they take time for people. So I would look for someone who's more easily accessible, who's willing to do the research for you and ask you questions too. Like, they need to be able to understand your business. Just as much as you need to understand what they can do for you. So ask a lot of questions. Those are going to be, if you can't find someone who's directly specialized, we are nationwide. So we can always, help talk to people and walk them through things or take them on as clients. Some CPA firms are, some aren't. It just depends. I am not a CPA, to put that out there. I am not a licensed CPA. I am a financial advisor, tax advisor, insurance agent. So those are my title. I'm certified, trained in all of those. But I do that because they all work together and they need to work together so closely. So, but yeah, that's the big thing. It's just finding someone who's going to help, who's going to look it up if you can't find someone directly educated in the industry, because self-employment is self-employment. And if they understand the rules, a few questions can get us where we need to be. So
how far in advance should actors and artists start preparing for tax season? Because like case in point, as we're filming this, and this will come out next week, March is right around the corner. February is right around the corner. So how far in advance should they start planning for tax season of 2020, 2026? Yeah.
I mean, it's up to each individual person, obviously. Excuse me, I have a cold. So you should be keeping track of your expenses monthly. Ideally, you want to be keeping track of them monthly. Then when you're done with December, you're ready. You finish December and January and you're ready to file your taxes. Most people don't do that, but that is definitely the easy and most efficient way to do it, because it serves a couple of purposes. First of all, it has you ready for tax season when tax season gets here. Secondly, you know where you're at. Because once you get to a point where you are making money and you do have some profits coming in, there are tax strategies that can be put into place if you're over a certain amount of income. We open an LLC, we file as an S Corp. There are a lot of things that you can do to lower your tax liability. But if you aren't even starting to prepare your taxes until after the deadline for some of those things, then we can't do it. So it's always best to do them monthly, so you kind of know where you are. We can have a conversation in January or February. I have clients. I live in a kind of a rural area. I have a lot of farm clients, and they do harvest, and then they come and meet with me before the end of the year because they want to know if they need to go buy more equipment. Did we make too much money? Do we need to go spend money? In order to save on their taxes. And it's the same kind of thing. Knowing where you are is going to help you save on your tax liability, because there are a lot of loopholes and tax strategies that can be implemented, but we have to know you need them before the deadlines for those.
Why don't you think, before we transition to the insurance, why don't you think more of this is taught in school? Like just even the fundamentals, like why don't you think like this isn't, I know when we've spoken, it's been a little bit more in the weeds and a little bit more specificity. And I know we're just giving generalization right now, because that's all some people can handle right now until they meet you one-on-one. But why don't you think even the basics are just taught?
I don't know. I mean,
no, I mean,
I have my suspicions, but that's going to get me on a whole political rant that nobody is ready for. But yeah, I mean, I don't know. I really think it goes back to when public school was established. Everybody was farming, and, most people were farmers, or they worked some labor job, I don't know. I think it's just another example of how our education system is not keeping up with our society.
Yeah.
But yeah, I don't know. Again, sometime we can get into my political views on that.
Yeah.
Nobody's going to hear that in a public forum.
The only reason why I ask is because my parents started me on my financial journey when I was 13. Opened me up a Roth and a 401k. And so like, this is all we ever talked about, to the right? Because I wasn't getting it from school, so I got it from them. And my mom always said to me, you don't know what you don't know. And that's where you need to start first and foremost. But I said, I think it does us a disservice as kids, because for some of us, when we get that first job, 16, 18, maybe 21, hey, how do I fill out this 1099 or this W? Like, this is some of our first, because even basic like a checkbook, that's not even being taught anymore. Like when I was in school, that was a requirement, and we had like fake play money. And every week our teacher would be like, okay, hey, rent's due, right? So we had to go up and give our $5 or whatever. Like, that's just not even. So yes, that's a conversation for maybe not here in another place. But if we're not learning it from mom and dad, if we're not learning from school, where do you think, before we get to this insurance, would be just a nice general place for people to start educating themselves?
I mean, there are just an unlimited amount of resources online. Obviously, TED Talks are fantastic. Khan Academy, which I think a lot of people really think is for kids, but there are some fantastic like financial literacy classes that you can go through there, that are just basic, because they are designed for like middle school, high school students. And that's all free. So, there's classes that you can take through, different online universities and things of that nature, but it's not necessary. You just really need to find the basics, whether it's through one of those resources I mentioned, whether it's through someplace like NerdWallet, or, just doing some reading financial articles. The issue with those is that you don't want to go too specific. Like, you don't want to, like, when you're just starting to learn like about budgeting, how do I budget? What's the difference between a Roth IRA and a traditional IRA? And you're just kind of wanting to learn those things. You don't need to understand what day of the month you pay your personal loan affects your credit score. Like, sometimes they get really weird detailed like that, but yeah, some of those classes are great ways to get some of that information. If you don't have another, with someone else in your life helping you with that.
Sure.
But yeah, it's tough. It's tough. It's very tough.
Bless. Financial and insurance and financial protection. What are some overlooked types of protections artists don't think about until it's too little too late?
All of them.
Okay, if you had to give me your top three just to start, what are three things that people overlook?
So, especially for an artist, your top three things that you're going to need are going to be your health insurance. You have to be able to take care of yourself. You have to be able to heal if you're sick. You're self-employed. You don't have workman's comp if you get hurt, in a lot of cases. I know sometimes they're all a little bit different, but likely there's nobody that's going to help you if you get hurt. So you need to be able to seek medical treatment. You need to be able to stay on your medications. You need to be able to have access to regular preventive testing. And, you have to, you are your product. You have to take care of that. You have to be able to eat well. You have to be able to stay healthy and to get healthy if you do get sick. So health insurance is huge, huge, huge. Disability insurance is the next one. You need to have your own disability insurance that is going to cover you for the lifestyle you're living now. So if you start to make a lot more money, you need more disability insurance, or you need to plan for not having that kind of income. If you get hurt, again, if you're working as a contractor, as a 1099, whether you get hurt at work or not, your income stops. You can't survive without being able to work. So a disability policy is very, very important. And those are priced based on your income. So, and your age and your health as well. But most people don't think about that. And that's a big one that is just a little less obvious. It's also super important to get life insurance. Just get it in place. It doesn't have to be super expensive. It doesn't have to be, again, when you're doing some of this financial planning, you may learn about all the different types of life insurance. It doesn't have to be a whole life insurance policy that's going to pay dividends and you can take money out at retirement and has all these bells and whistles. Just get life insurance, because you don't know. There may come a time when you have a family or when you have other people who are dependent on you. And if you have had something happen health-wise, you can't get it anymore. So get it in place while you're young, while it's early, even if it's just cheap, because that locks in your insurability, and then you can continue that, down the road as you need it. Yeah. So those are the big ones that most people don't think about. Obviously, as time goes on, if, the more work you start to do, you've got liability insurance, protecting your assets on an LLC and, all of those. But most of the time, just starting out, that's not a necessity.
What about, because I can only speak to it from a union's perspective. I've never known what it was like to not have insurance, because prior to 26, I was still on mom and dad's, which was the saving grace. Right. But post coming off of them, joining the union, I had a smooth transition. And so I know when you're doing union jobs, there's some saving grace, but when you're non-union, that's a little different. So I don't want to lead anybody astray, because even the union's insurance is not perfect, and our insurance is based off of the amount of weeks that we work. Talk about fickle. So unless you have mom and dad, again, under 26, unless maybe you might be married and maybe you might be on your significant others. Like I know when I come off my Blue Cross, when I come off of Cigna, having been on Beetlejuice, which covers me until next year, July, then I'm going on my husband's insurance, which is Aetna. What would your recommendation be? What are some affordable options for health or disability insurance specifically designed for artists or gig workers? What would you recommend?
The best option, especially if you are just starting and your income is lower, is always going to be the marketplace, ACA, healthcare.gov. We write those. I don't suggest you do it on your own. I suggest you work with a professional. And I don't mean the phone number for the marketplace. I mean an actual insurance agent. God bless them. I know those people work really hard and they have a tough job, but they are not insurance professionals. They are not even required to be licensed. So find an insurance professional, again, whether it's us or someone else, who can walk you through the process and actually help you understand all the caveats of self-employment and that income and how that will affect your premiums. If you don't qualify for the ACA or your income is too high to qualify for tax credits, there are a plethora of other options out there for self-employed people. There are what are called health sharing plans or health sharing ministries that you can join. There are obviously there are state Medicaid plans. Some plans cover adults still. Some states do. My state doesn't, but some do. And if your income is low enough, that's free. That's always the first option, is the free option. So, look into that as well as an option, either through websites or usually if you do a marketplace application and you would qualify for Medicaid or state insurance, they would send that directly over. So, that is always an option for low income people and kids. And then there are other options available through, there's just, individual insurance companies. There are what are called short-term medical plans that can cover you between jobs that are much, much cheaper than a standard health plan. I do want to put out there that those should only be used for short-term purposes. I know there are some people in the industry that in my industry that write those on people as a long-term solution for their health insurance. It is not a good long-term solution, but it is a good short-term solution. So that is an option. Really it's just reach out to again, a professional that you trust, and ask those questions and make sure that they sell all of those products, because if they don't, then you may be missing the best opportunity for what you actually need.
Few more questions before we wrap this up, but I caught something, and maybe you can touch on this a little bit more. Does it matter too much if it's not a national brand from state? Like if I'm in Wichita, Kansas, and if I know that I'm moving to New York, is there anything that I need to be concerned of when I'm in terms of moving state-wise? Does that come into play at all? Okay.
Absolutely. Most plans now are what's called an EPO or an HMO, and that means that they only cover plans or providers that are in their network. Most plans will cover emergency, state to state, doesn't matter. You can be anywhere, go to an emergency room and have coverage. But if it's a long-term move or more than a month or two, and you may need an actual doctor visit, then yes, you need to change your coverage to somewhere in that state, or check with your insurance company and see if they have anyone in that area that would be a network. I have some people that travel. I have a couple, actually, it's really fun. They're ski patrol. And so they go to Montana every winter and do ski patrol, but they're not there for 4 months, I think. And so we don't change their plan to a Montana plan, but I do make sure that I enroll them in a plan that has nationwide network coverage or telehealth, so that no matter what's going on, they can get access to a provider, when they fall down the mountain and break their leg. Gotcha. And that's what I say to them every year. You fall down the mountain and break your leg because you're crazy. Okay.
All it takes one time. God. Two final questions. First one, can we talk about the in-between times? And I know you mentioned this before, but I just want to hammer this again. I want to beat a dead horse. Excuse me for saying that. Because I really want people to understand that until you are full-time working with somebody, there's going to be gaps. Yeah. So what would you recommend in terms of, be it a percentage-based system? I know you talked about budgeting, or when you talk about maybe from a month to month, what would just be if you could give, if they hear nothing else from today for the in-between times, what's the solid piece of advice that you hope that locks in with people for the in-between times and making sure that they have their money right?
Live within your means and save. Make sure you have all those living expenses saved every time you can. So if you have a gap and that depletes, great. When you go back to work, you need to build that back up again before you come into a time where you may have another section or another layoff or another period of unemployment. Because you just don't know when that's going to happen. You could, we hear it all the time. Shows get canceled in the middle of the season. Actors get fired, movie sets get shut down. It happens all the time. So the first priority when you get to work is contributing to that savings.
Yeah.
Once you get that savings built back up, then, you know, you can relax on it a little bit. As a regular, as once that's built up, I always recommend 10%. You want to be saving 10% outside of your retirement savings. Retirement savings is 10%. If you can, and I understand sometimes it takes a little bit to build up to that, but you also want to be saving 10% on top of that 3 months. That's just your savings. You know, you want to be able to keep regular savings too. When you're self-employed, you have your windfall, but you still need to also be saving for a down payment on a house, for college, for when you have to replace a car, you know, types of things too. So, you know, that's a down, you know, that's the very next thing after we have those 3 months saved up is we want to still be saving 10% for retirement, 10% for savings, just regular savings, and still live within your means. Don't think that because you get a big check this month, it's going to come every month. Because it doesn't.
Come on now, that part. Last question, long-term wealth and business mindset. And again, I know we talked about this at the beginning before, but what role does financial literacy play in creating artistic freedom? I know that would really apply to anything and everyone, but specifically as we're talking about show business, where do you think that understanding falls within the world of what we do?
Well, you know, it kind of goes back to what we were talking about at the beginning. If you aren't investing in yourself and you're not investing your time, training, taking classes, education, and those things often also cost money, you have to be able to invest in yourself in order to get to the next step. So it's the same as, you know, investing in your business, marketing, producing a better product. You have to produce a better product. So that all goes into getting to that point where you have artistic freedom. You can be pickier about your choices when you have money in the bank.
Say that part again.
You can be picky about your choices of work when you have money in the bank.
Yeah. I
have lived this life too. In the last 3 or 4 years, I finally hit a point in my business where I could say no. I can tell a client, I don't have time to take on your hot mess, or I can't do it for what you can pay me, or you're just too much and I need to protect my peace. And it's the same thing in the industry. You know, you have a lot more freedom when you don't have to take every single job that comes at you. And that goes into safety too. You know, you don't have to wait. Sorry, I said that backwards. You can wait to work with the people you want to work with and the people that you feel safe with, that you feel comfortable with. And you don't have to take this sketchy, weird, you know, monkey, like, you know, from Big Bang Theory. One of my favorite episodes was when Penny was trying to decide whether she was going to take the weird monkey role because she really wanted to stay in the business, but she didn't have any, you know, she didn't want to take this role. You know, those choices are a lot easier to make when you don't have to make the money now. So it absolutely gives you so many more choices when you're doing all of the financially responsible things, and you have more space and time to wait for something that you're more happy with, or that's going to pay better, you know, realistically too, more desirable roles or gigs or companies to work with. You know, we work with companies, and some of what my daughter does, and we don't work with the companies that she isn't comfortable with. You know, I've had to walk away from a couple of different performance companies. So.
Well, Crystal, thank you so much for sharing your time. If you could tell the people, if they wanted to, again, I'm starting from scratch. I don't know anything about this business and I need some guidance. If people wanted to reach out to you and use you as a resource until at such a time where they transition to work, like where can they find you online? What's a good number for them to reach? Your website? Like, how can they get a hold of you?
I have a website. My website is davistaylorfinancial.com, DAVISTAYLOR. My email is just my name, crystal.davistaylor@gmail.com. And even if we haven't talked about something that someone may need assistance with, that doesn't mean I don't do it or that I can't guide you to someone that does. So we are, our breadth of knowledge is huge. We do a lot of things that we didn't even touch on today. So, and I am happy to help. I don't charge for phone calls or emails. I'm not going to send you an invoice if you ask me a simple tax question or ask me, hey, you know, this is what's going on. Should I start an LLC? I'll shoot you a quick answer, and you know, I'm not going to do that. My phone number, our office number, if anybody wants to call, is 785-504-4640. That will get you direct to my staff. And we also have, you know, Facebook pages under Davis Taylor Financial, and all the ways you can reach out to us, all the ways. So
perfect. Well, one final thing, just for them going forward, because I appreciate you for offering your service and being generous with your time and energy, but I still want people to be intentional. So when they reach out to you, what would be a good intentional way for them to reach out with any question that they have? Like how either refined or how tailored, how specific can they be so that makes sure they get the most that they need out of that email or phone call?
Yeah, the best way to reach me is going to be email, because that's going to come directly to me. The phone is going to go to my staff, and they don't let anybody talk to me. They're not. That's the point. They're not supposed to. I don't have time to take phone calls. So they will make an appointment for you if that is something you want to do. They will do that. And again, I don't charge for those either, but at least not at the beginning. But yeah, email is great. Be as specific with your questions as you can so that I can get back to you with as much information as I can spew out in, you know, a 5 or 10 minute email. I do have very busy seasons. So because I do health insurance and Medicare, I am extremely busy November, December. So I will get back to you, but it may take a couple of days, and it will probably be in the middle of the night. I also am extremely busy from like the 1st of March until April 15th, until tax day, although that's not nearly as bad as open enrollment. We get to see, or have to attempt to see, 1,800 people in 6 weeks. So we are very busy, but I do still try to keep up on my emails and things of that nature. So
perfect.
And if you put in your subject line on those emails Corbin's name, or reference, you know, entertainment industry, something to that nature, then I'll know, and I'll be able to just grab it and respond for the most part. So
yeah, perfect. That was great. I'm going to end this now. I'm in this recording. That was great. We did this, and it recorded.